Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is July 30th, 2025. I am Nova.
I am Satoshi. Today, we're jumping straight into the crypto world. It's always moving, right? We'll hit the key market shifts, policy changes, and the big institutional moves from the last day or so.
Yeah, our goal here is really just to cut through that constant noise. We want to pull out the essential stuff, the surprising bits from the latest crypto news so you actually get what matters.
Okay, let's do it. Quick market snapshot first. The big players, Bitcoin and Ethereum, they've held pretty steady. BTC was hovering around, $118,000, barely moved, like plus 0.02%. And ETH, near 3,792 tillers, that's up 0.7%. So they're keeping those recent gains. But then you look at the meme tokens. Totally different story.
Right.
Dogecoin, Shiba Inu, they dip slightly, maybe 0.1%. But the smaller ones like PPE, FLEKI, they fell harder, like 2 to 4%.
And that difference is interesting. It kind of points to maybe a weakening appetite for the super speculative coins right now. You know, perhaps a bit of a rotation back into the more, let's say, established assets. Sentiment feels cautiously optimistic overall. People are balancing the good news with, well, the usual crypto volatility.
That caution makes sense. And this divergence, it kind of leads us nicely into the next big thing. Regulation starting to catch up, maybe?
Yeah.
Big news out of the US SEC. A pretty significant policy shift on crypto ETFs. What exactly happened there?
Okay, yeah, this is potentially a major turning point. The SEC's given the green light for in-kind redemptions for spot crypto ETFs.
Think in kind, meaning?
It means the fund managers can use the actual crypto, like Bitcoin itself, for redemptions instead of having to sell the crypto for cash first.
All right.
It aligns these crypto ETFs much more closely with how traditional commodity ETFs work. Think gold ETFs, for example. This could really lower costs, make things more efficient, and potentially, open the floodgates for more institutional money. We're talking maybe billions in new demand because it simplifies things for the big players.
Billions, wow. And speaking of big players and institutional demand, Strategy, formerly MicroStrategy, made a massive move.
Huge move.
They used $2.5 billion from their recent IPO proceeds to buy another 21,021 Bitcoin, average price around $117,000. That brings their total stash to something like 628,791 Bitcoin. And it made their IPO the biggest in the U.S. for 2025 so far, just based on proceeds. What signal does that send?
It's a really strong signal. It just shows continued massive institutional conviction in Bitcoin's long-term value. It's a very aggressive way to use public markets to essentially stack Bitcoin as a core asset.
Definitely aggressive. Okay, let's hop over to Asia. Hong Kong's making moves too, specifically on stablecoins.
Right. The HKMA, Hong Kong's monetary authority, they've signaled that the first stablecoin licenses are likely coming by early 2026. They're starting slow, maybe just a handful of firms initially. It really shows they're taking a measured, careful approach. Focus is clearly on quality control, risk management. Gives firms clarity, which is good.
So we've got these specific crypto things happening, ETFs, big buys, stablecoin rules. But how does this all fit into the bigger picture, the global economy? Like, we just saw that US-EU trade agreement ease up on tariffs. Most EU goods tariffs dropping from 30% down to 15%. That usually helps risk appetite, right?
Exactly. Lower tariffs can free up capital. Maybe some of that finds its way into riskier assets, potentially including crypto. It's sort of a background positive. But then you've also got oil prices spiking recently, mostly because of U.S. sanction threats against Russia's energy exports.
Okay, and how does that play in?
Well, it's a bit of a double-edged sword. On one hand, rising oil can stir up inflation fears, and sometimes that boosts Bitcoin's appeal as digital gold, an inflation hedge. But on the other hand, higher inflation could force central banks like the Fed to tighten monetary policy more aggressively, and that could put pressure back on assets like crypto. So yeah, these macro factors are definitely swirling around.
Okay, so lots of moving parts. We have the market action, the regulatory shifts, these huge institutional plays, plus the global economic stuff. Given all that, what should listeners really be keeping an eye on in the near term?
Good question. I think for you listening, a few key things to watch. First, the actual follow-through on those ETF inflows. Will we see the billions materialize? That's critical. Second, keep a very close eye on the U.S. Federal Reserve. Their next interest rate decision is coming up. If they sound hawkish, that could weigh things down. Dovish could help. And just generally, expect continued volatility. We might keep seeing this rotation toward sort of quality tokens, BTC, ETH, if uncertainty picks up. So yeah, stay vigilant, manage your risk. That's always key.
Right. So the overall feel is cautiously optimistic. driven by some positive rule changes and maybe a better global economic vibes, but still watching those risks.
I think that sums it up well. The market seems pretty resilient, maybe even primed for growth. But it does leave you with a big question to think about. How is this delicate balance going to play out? You've got new institutional money coming in, regulations changing fast all over the globe, and these persistent economic pressures. How will all that really shape where crypto goes next? Will it get more mature, or are we in for more surprises? Something to keep mulling over. Enjoyed the brief? Please like and subscribe. We deliver fresh market updates, macro signals, and crypto news daily in just 5 minutes. Live streams coming soon. Stay tuned.